Welcome to the Deep Dive. We're jumping straight into Deutsche Telekom's first quarter 2025 earnings call today.
Yeah, the CEO and CFO laid out the performance and what they see coming down the pike.
Right. And our mission, as always, is to pull out the key insights from that call for you.
And honestly, Q1 2025, it looks like a pretty solid start to their year. Management sounded confident, said they're, squarely on track for their targets.
Okay, let's hit those high-level numbers then. The group financials looked good across the board, really.
Organic service revenue was up, 3.5%?
Yeah, 3.5. And organic EBITDR, that adjusted earnings figure, climbed even more, 5.3%.
And the big one, that free cash flow number.
Huge, up 50% year over year, 50. Plus, adjusted EPS, earnings per share, that's on 11% lift.
That cash flow jump is definitely something to note. And on guidance.
They basically confirmed everything for the businesses outside the U.S., and they took T-Mobile's strong Q1 performance and just reeled that upgrade into the group's full-year targets. So a slight upgrade overall for the group.
Makes sense. They also mentioned wrapping up 3 deals in the quarter.
Right. The Lumos fiber JV, that's U.S.-based, and then Vista and Bliss in out-of-home advertising.
And those moves, plus performance, got their T-Mobile U.S. stake back up to 51.8%. So solid majority there.
Okay. And a key point they made was that all the segments contributed to that overall organic growth.
Yeah.
It wasn't just one area carrying the load.
Exactly. Which is, what you want to see.
All right. Let's unpack the segments. T-Mobile US, the powerhouse, how do they do?
Very strong. Adjusted EBITDA up 8.4%. That translates to 6.1% organic growth under IFRS rules.
And service revenue.
Exceptional, really, up 5.2%, mostly driven by postpaid service revenue, which jumped 7.6%.
Wow, and the financials mirroring that.
Pretty much. Free cash flow up 31%, EPS up 29%. Good stuff. Customer growth was solid, too.
Even though they mentioned that churn ticked up slightly.
Yeah, they flagged that, said it was temporary, expected, tied to optimizing some older rate plans. Shouldn't be a long-term issue, they think.
Okay, but the flip side. Gross ads were actually up across all the main categories.
Right. Postpaid phone net ads were a little below last year, but high-speed internet net ads a bit higher.
So the total net ads.
1.3 million, which apparently is their highest ever number for a Q1.
Highest ever Q1, okay. And they stuck to their full year guidance for postpaid net ads.
Yep, reiterated the 5.5 to 6 million target. And because of that strong Q1 and the deals, T-Mobile actually raised its own 2025 guidance for EBITDA and free cash flow by $100 million at the midpoint.
And that's the upgrade that flows through to the group level, right?
Exactly. So now Deutsche Telekom is projecting group EBITDA around 45 billion euros and free cash flow around 20 billion euros for 2025. Other guidance unchanged.
Okay, let's hop across the pond. Germany, what's the story there?
Consistency mostly. That's 34 consecutive quarters of EBITDA growth. Pretty amazing streak.
34. Wow. But headline revenues were down a bit.
They were, but management was quick to point out why. Lower handset sales, less revenue from building fiber for joint ventures, basically low margin stuff that doesn't hit the core service revenue metric.
Ah, okay. So service revenue, it's
actually accelerated from Q4, grew 1.4%. The EBITDA growth, 2.2%, was a bit dampened by higher personnel costs, new wage agreement and energy costs. Grid fees went up, that kind of thing.
But they're still committed to the full year guidance for Germany.
Absolutely. Sounded confident they can manage those cost pressures.
Good. Let's get specific within Germany. Mobile service revenue.
Strong. Up 3.1% year over year. Mix of subscriber growth, no termination rate cuts this time, and some favorable timing effects. They do expect that to moderate a bit, maybe towards the 2 to 2.5% guidance range for the full year.
Okay. And fixed line?
That was hit a bit by lower government spending on infrastructure. They expect more spending on things like infrastructure and digital sovereignty down the line, but, it takes time for that to actually show up in the results.
Right. So broadband growth within that.
Still in the 3 to 4% guidance range. And wholesale access revenues, other providers using their lines, grew 2.1%.
What's driving that fixed line growth, mainly?
Upselling. Getting customers onto higher speed plans, that lifts the ARPU, average revenue per user, by about 3% a year, they said.
Okay, but here's the thing that caught my ear. Broadband net adds actually decreased in Germany in Q1, minus 7,000.
Yeah, that was a key point. First Q1 drop in broadband net adds in a long time. Management wasn't thrilled, obviously, even though they keep stressing the shift to value, to ARPU, over just pure volume.
So what's the plan to turn that number around, the counter plan?
A few things. One, speed up getting money out of those MDUs, the apartment buildings where they have fiber access. Two, focus more on churn management, keeping the customers they have. And three, use their other brand, Kunksta, to offer broadband now, hitting that value segment.
So they expect the total number of broadband customers to be stable for the year, but the main focus is getting more revenue per customer.
That's the message. ARPU growth is the priority.
And the fiber build itself.
Yeah.
FTTH.
Net adds there grew 36%. Strong. Still on track for 2.5 million homes passed with fiber in Germany this year.
Okay.
Growth slowed a bit year over year, mostly because they're shutting down a satellite TV platform in Hungary, which cost them about 28,000 subs. But ex-Hungary, they added a solid 37,000 traditional TV subs, plus another 50,000 over-the-top viewers.
And mobile net adds in Germany.
Steady, 270,000. Churn stable, too, even with what they called elevated competition.
Right.
Moving to the rest of Europe outside Germany. Another decent quarter. Organic revenue up 3.7%. Organic EBITDA grew 7.2%.
Inflation still a factor there.
Yeah, they expect those effects on pricing and costs to ease up later in the year, but still present for now.
Mobile growth was a bit weaker in Europe.
A little. Pointed to some aggressive promotions in Austria and Croatia, plus a specific campaign in Poland. Broadband was pretty stable, and that TV net add, again, mostly that Hungary satellite thing.
Got it. And T-Systems, the business customer division.
Still on a positive path. That's 9 straight quarters of EBITDA growth now. Order entry looked really good, up 70% quarter on quarter and 12.5% over the last 12 months.
Managing pressure from the auto sector.
Yeah, they offset that with growth in health, road charging, and defense contracts. They see things like digital sovereignty and national security as big future growth areas, especially in Germany.
Okay, let's pivot to some of those cross-cutting themes. Networks and AI were big topics, right?
Definitely. On networks, they passed another 3.2 million homes in Europe with fiber over the last year. That brings their total fiber reach close to 21 million households.
And in Germany specifically, they're doing the lion's share of the build.
Yeah, they claim they're delivering nearly 2/3 of the entire German fiber build-out. Plus, they've signed deals covering almost 6 million MDU households for the in-building wiring, which is, crucial.
Right, getting it into the apartments. And mobile network upgrades.
Modernization program underway in Germany. That's what allows their new unlimited tariffs. And they mentioned NEMO projects aiming to boost speeds from 500 megabits per second up to a gigabit soon.
And U.S. network getting recognized.
Yep. T-Mobile's network named world's best in the large land category. Plus, T-Mobile launched 5G Advanced nationwide and started beta testing their T-Satellite project. Seeing strong interest there, apparently.
Okay, AI and digitization. Big focus at their last big investor day, and they stressed it again here.
Very much so. Positioning themselves as a leader in AI implementation in the telco space, using it across the board customer experience, efficiency.
Did they put a number on the efficiency savings?
They did. An estimate of around 800 million euros in cost savings by 2027, specifically from AI and digital transformation. That caught my ear. They said they'll report more on progress.
800 million by 2027.
Okay.
Any concrete examples of how they're using AI now?
Yeah, quite a few. AskT, an AI knowledge tool for employees in Europe, using AI to make fiber rollouts more efficient, like 75% remote router management. AI helping run the mobile network more autonomously, monitoring and fixing issues. Coding assistants speeding up IT work. Even AI chatbots handling, they claimed, 50% of customer issues.
Wow, 50%. That's significant. And using AI for customer-facing stuff, too.
Yep. Mentioned the Magenta Moments rewards program, uses AI for personalization. Almost 12 million customers signed up in Europe. And in the U.S., T-Mobile seeing results. The share of upgrades done digitally doubled year over year, hit over 50% in Q1.
All right, let's talk competition. They acknowledge it's heating up, right?
Yeah, definitely. Said it stepped up, remains elevated, and you can kind of see it in some of the numbers, though not everywhere.
And their strategy to counter that.
Pretty consistent message. Play to their strengths. That means best networks, great customer experience, and really leaning into digital AI automation to cut costs.
The U.S. strategy.
Keep extending that 5G lead, push differentiated growth like fixed wireless. They acknowledged the higher churn amid promotions, but pointed to those record gross adds as the counterpoint. Germany, mobile. Competition tougher since that Vodafone regulatory thing. Their answer is using their modern network for those unlimited plans without killing the experience, plus the new tariffs.
And German broadband. That seems like the trickiest spot.
It's mature, yeah. Seeing churn to the altnets, the overbuilders, and facing aggressive moves from Vodafone, DT's answer is basically fiber is the end game. So build it faster, build more of it, 2.5 million homes past a year, and get people connected.
And supplementing the main brand.
Right. Using things like extended prepaid in the US and that Kunksta brand for fixed line now in Germany, targeting the value segment.
Got it. Quick mention of ESG too.
Yeah, just reiterated focus on energy emissions targets, plus campaigns on things like hate speech and climate awareness. Standard stuff.
Okay, the Q&A section often brings out more color. What were the key points investors pressed them on?
A lot of focus on Germany, particularly that broadband number.
The native 7,000 net adds. Yeah. How did they elaborate on that?
Well, they repeated they weren't happy with it, even with the strategy shift to ARPU. The bounce back plan involves, like we mentioned, hitting those MDUs faster, better churn management, and using the Kunksta brand for broadband. They still think the overall broadband base will be stable for the year, with growth coming from ARPU increases, selling higher speeds, basically.
And the overbuilders. Any change in that dynamic?
Management said no, pretty steady. Activity hasn't ramped up significantly from prior quarters. DT is building most of the fiber anyway, they claim, and while churn to overbuilders is real, it's not accelerating wildly, consistent with before.
Okay. German Mobile also got some attention, value versus volume.
Right. They talked about the different segments, B2C, B2B, and MVNOs, emphasized their network quality, high NPS scores in the 40s, low churn in core segments. They under their new unlimited and family offers are ARPU accretive overall, even if a single extra family SIM looks cheap. Said their mobile service revenue growth proves the strategy is working compared to rivals.
And MVNOs, the operators using their network.
Yeah, they acknowledge new players coming in, OTTs, internet providers, shaking things up a bit in that segment. But they were really firm on discipline, said they won't do deals that let MVNOs just arbitrage their retail prices by wholesale cheap and undercut Magenta.
So no crazy deals.
Exactly. They mentioned a specific example, Revolut, as the kind of deal they wouldn't do because it enabled too much arbitrage. They'll consider MVNOs for segments where they aren't strong themselves, but the focus is protecting the value of their core business.
Interesting. Any mention of handset pricing or reacting to broadband promotions?
Briefly. Might need to look at handset prices, maybe. But on broadband, they feel their upselling strategy is working, so no need to panic and react to Vodafone's aggressive pricing right now.
They sounded pretty confident about handling competition in Germany overall.
Yeah, almost defiant. Said they're not nervous, listed their strengths. Network, tariffs, brands not needing wholesale partners, backbook stability, financial muscle, and customer perception via NPS. Basically, keep calm and carry on.
What about the bigger picture? Can European consolidation?
Came up. The idea is getting more traction, they think, especially with the EU focus on digital sovereignty.
But are they planning anything?
No concrete plans for cross-border connectivity deals. Main reason, regulatory fragmentation. Just too complex across countries, no clear policy framework, hard to see the shareholder value right now.
So focus remains national.
For now, yes. They support consolidation within countries, like what happened in Spain. Good for customers, good for shareholders, they believe. Maybe the push for a digital single market changes things later, but it's too early, they feel.
Okay. German government stimulus. Any impact expected soon?
Plan needs to pass parliament first. Short term, maybe a boost from digressive depreciation, faster write-offs could be around 30%, but timing's fuzzy. The corporate tax cut doesn't kick in until 2028, so outside their current plan.
So the depreciation helps cash flow.
Could be a tailwind, yeah. They're debating whether to reinvest it or let it boost free cash flow. Overall, though, they're positive on the German government's direction stimulus, sovereignty focus, see opportunities in defense, cloud, security, digitizing government, called it triple plus positive.
More on those German MDUs, the apartment buildings.
Yeah, they have agreements covering almost 6 million households for access. Key point. If cable exists, everyone gets access anyway due to regulation. So they'll use existing infrastructure or build fiber, expecting networks to be shared over time.
How are they pushing monetization there specifically?
Incentives for owners' platforms getting multiple signups, more engagement with owner associations, incentives favoring fiber over copper installs, using their scale. And interestingly, willing to consider buying wholesale access from other fiber builders within MDUs if it speeds things up. Getting fiber connected is the priority.
T-Systems outlook. When will those big public sector deals land?
Timing's still uncertain. Could be several quarters due to government processes, new ministry, budgets. Optimistic for some impact in the second half of 2025, but no promises until deals are signed.
Okay, circling back to MVNOs, Germany and US. Same disciplined approach.
Yeah, pretty much identical message. Low likelihood of doing large MVNO deals in the US either if they just arbitrage the retail business. Policy is consistent.
And the US market slowdown fears. Postpaid phone market looked weaker in Q1 industry-wide.
They acknowledged the observation but said it's too early to call it a trend. Feel T-Mobile is less exposed because of things like fixed wireless growth. Pointed out T-Mobile grew gross adds everywhere, highest postpaid growth in 8 years for them.
And the churn uptick.
Said it was temporary, linked to those legacy plan price hikes, expected to continue a bit in Q2, but totally factored into their guidance. The U.S. team sounds very bullish.
Capital allocation, selling T-Mobile shares versus buying back DT shares.
Right. They've filed to sell into the T-Mobile U.S. buyback starting mid-June, potentially,
Right.
aiming to keep around 52% ownership, which they see as a solid majority.
And leverage is okay.
Yeah, leverage actually came down in Q1, helped by cash flow and the weaker dollar. Confident they'll stay in their comfort zone. If they do sell into the T-Mo buyback, don't expect a bigger DT buyback this year. They'll keep that cash as dry powder or optionality for later decisions, likely in Q3.
Personnel costs in Germany and AI's role.
Expect headcount reduction to accelerate slightly from the 4% year-over-year dip in Q1. Plan is clearly to use AI to free up capacity in service and tech, helping offset future wage pressures. The German team has an acceleration plan for this.
Wholesale revenue growth drivers.
Mix of things. Customers migrating to higher speeds, including fiber, lifts ARPU on wholesale deals. Plus, they're benefiting from a moderate price increase currently, though that effect ends late 2025. Reinforces the value focus. 2/3 of fixed line growth is value, 1/3 volume, same for wholesale.
German mobile penetration. How can it still grow if it's near 100%?
Good question. Management points to multi-SIMs, tablets, cars, wearables, prepaid to postpaid migration, and premium plans. They want to bring MVNO users under the DT umbrella, use more for more bundling to lift ARPU. So growth is about selling more services per person, not just more SIMs. Drive penetration into premium plans, use MVNOs as a funding source or acquisition channel.
Okay, last point from Q&A, European towers. Selling them off.
They're evaluating, already carved them out in several countries, said they're ready to go, called it a cookie jar, an option they have but don't need to use today. Would likely be country by country if they did sell, as the structures differ.
Wow, yeah, that was a dense call. So summing up this deep dive, Deutsche Telekom's Q1 shows T-Mobile US really driving growth and that guidance bump. Germany and Europe are more mixed, dealing with competition, but they have clear plans, build networks, focus on customers, and heavily push AI and digital for efficiency.
Yeah, the core message seems clear. Leverage the network, keep customers happy, and use tech to cut costs where possible. They gave pretty detailed answers on the challenges, especially in Germany, emphasizing that value over volume approach.
Okay, just a reminder for everyone listening.
Yeah.
This whole discussion based purely on what was said in that earnings call.
Yeah.
It is absolutely not financial or investment advice. Please do your own homework.
Exactly right. We're just breaking down the discussion points from the company itself.
All right, now for our favorite speculative segment. Thinking purely about the undertones and emphasis from the call. And again, huge disclaimer, this is not advice, just brainstorming some plausible, maybe slightly outrageous ideas.
Yeah, thought experiments based only on interpreting the call, nothing more.
Okay, idea one, the fiber endgame arbitrage. Management couldn't have been clearer. Fiber is the endgame in Germany. They're building most of it, got those MDU deals, even willing to buy wholesale access in apartments to speed things up. They see competitors churning while they build and connect.
The underlying thought is that DT's sheer scale, their build speed, those crucial MDU access deals, and their pragmatism about how fiber gets connected, it puts them in a massively strong position long-term in fixed line, potentially squeezing out smally players.
So the outrageous but plausible trade. Long Deutsche Telekom, short a basket of smaller German altnets or maybe regional cable operators. The idea is these smaller guys might just struggle to keep up with DT's build or monetization in MDUs, facing pressure on ads and maybe even getting overbuilt or bypassed.
Okay, provocative. Idea two. The AI cost savings catalyst. They didn't just talk vaguely about AI. They gave a specific number, 800 million in savings by 2027 from AI and digital transformation. And they promised to track it.
Right, that's a concrete, measurable target. It signals a potentially significant margin uplift down the road. You don't always hear such specific, large-scale AI savings goals from all their European competitors, or at least not quantified like that.
So the trade idea here. Long Deutsche Telekom Short, another major European telco that didn't explicitly highlight a similar, quantifiable, multi-year AI-driven cost savings target in their recent calls. The thinking is DT's clear 800 million path gives more visibility on margin expansion compared to peers who might be less advanced or less transparent about the financial impact of their tech efforts.
Again, purely speculative concepts, folks. Based only on parsing the earnings call, do not trade based on this. Do your own research.
Absolutely. So wrapping the quarter, solid Q1 for DT, T-Mobile US is the star, leading to that group guidance lift. They're tackling competition head-on in Europe, banking on network builds, customer focus, and importantly, that big push on AI and digital efficiency. Leverage looks fine. T-Mobile stake build continues.
Yeah, the strategy seems to be leverage the network, keep customers close, and use technology aggressively to manage costs and find an edge in competitive markets.
And that's the picture painted by their Q1 2025 earnings call, not financial advice.
So, final thought to leave you with. Given their confidence, that aggressive fiber plan, and that very specific 800 million AI target, what does that combination really signal about Deutsche Telekom's potential resilience and maybe even ability to gain ground in these tough European markets over the next few years? Something to ponder.